Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. Okay, so I've gotten a question about, how single high income earners can reduce their taxes or can save taxes or however you want to put that. And so I really wanted to have a conversation just around this whole topic to really help put you in the right mindset when it comes to taxes. Because at the end of the day, we're all going to pay taxes, whether we like it or not, unless you just have no money. That's not where you want to be. But if you make money, you are going to pay taxes. That is it. And there is a difference between saving on taxes, paying at a lower rate, than paying zero taxes. And I really want to make sure that I make that clear because, you see the headlines, we're still, Jeff Bezos is still in the news, right? They talked about how he didn't pay taxes on $11 billion. And then Lord, went and bought a yacht. Okay. So now folks is all up in arms again. But I guess what I really want to make clear to you is that it wasn't him that didn't pay taxes on $11 billion. It was his company, and he didn't pay taxes based on corporate tax laws. Okay, that's what it is. Now, but has anybody seen his personal tax return? So just to say that he did not pay corporate taxes does not mean he did not pay personal taxes. Okay. And so you definitely want to make that distinction, and also understand there's a difference between tax-free and tax deferred. So, so when we're talking about saving on taxes and everything, there is, I think there is this myth that like wealthy people don't pay taxes, and that is a myth. And it's just the fact of life that if you do make money, you are going to pay taxes. And so there's something else I found out that's bringing more bad news. So if you're up there in the $100,000 range and you make more than $129,000 in a year, guess what? You're going to have more Social Security taxes being taken out because the amount that is subject to Social Security tax has been increased from 128,400 to 132,900. The 6.2% rate is the same, but they're taking it from more money. So that equates to an increase of about $4,500 a year that's being taxed, and it works out to about $375 a month. Now, what the part that I found funny though is that also with that the max benefit for Social Security has also increased by $73 per month. So that's about $876 per year of a benefit increase for Social Security, for 4,500 more of your dollars being taxed. So I don't know exactly how that math is going to work out, but it is what it is. So now we get into that whole, how do we save on taxes? There are, and I guess this is where you really need to have a financial planner engaged. This is somebody that you need to have on your team, because the old stuff that really used to work really doesn't work anymore, right? Because we're talking, we talk about funding retirement accounts and, the IRAs and the 401ks and whatnot. That may not work for you. And the reason is when these vehicles were created, when the 401k was created, tax rates were really high and they were coming down. So then people who funded 401ks really benefited from that, because at the time that 401ks were created, I want to say the top tax rate might have been about 70%. It was something way out there ridiculous, right? So at that time, tax rates were coming down, so people were able to put their money in their 401ks and get it and take it out at a lower tax rate. That's not the case anymore. Even though we have had a reduction in taxes, the fact is, taxes have steadily increased. And so when we're talking about being at retirement age, when you're younger and you're funding retirement, you got kids and all that, so you may have these deductions. You may have a home, and and may be able to deduct some mortgage interest, maybe not so much now that we had the tax code change, but you had the ability to deduct these things. But when you get older at this point, you're retiring, you don't have any more child tax credits, your home is more than likely paid off. So you're going to be at a higher income tax bracket at this point. So when you withdraw from your retirement account, you're still going to, be paying this higher tax bill because you're going to be in a higher income tax bracket because you don't have all these other deductions. You're not funding your retirement anymore. You're withdrawing now. So those things of funding retirement accounts and even owning a home, people should you own property? Absolutely. Do not get it twisted. You should own some property. But on the tax end, though, because of the changes in the tax code, there are fewer people who are actually itemizing. And there are still some people that are itemizing, but it's very few. So with the whole tax code change that happened and with this first filing, people really woke up to what is going on in the tax world, and they're really starting to ask some questions. So then the question becomes, okay, well, I'm single, I'm making a lot of money, and I'm getting killed on taxes. What can I do? This is when you really need to look at investments in growth, because it's not to say that you are not going to pay taxes, but you're going to be paying a different kind of taxes. So when you're owning a business, the difference between getting a W-2, working a W-2 job and owning a business is that when you own a business, you get to subtract your expenses and then pay taxes on what's left on the profit versus, when you get a W-2 job, you get those taxes taken out first and you live off of the rest. And because of the tax code change, there are a lot of people who were taking unreimbursed employee expense deduction that can't do that anymore because it's been taken out of the tax code. So so we're talking about, then you need to be looking at tax advantaged ways to grow your money versus trying to not pay taxes. One of the things that people scream for is, I'm going to own a business. Okay, but here's the thing with owning a business. A lot of times people believe that owning a business will increase a tax refund. That might be in the beginning, because when you're getting started in business, you're investing a lot, you haven't sold a lot, so you may be operating at a loss. When a business operating at a loss is the only way it offsets other income, and then it produces it reduces your taxable income. Okay. Again, that only works for a minute. All right. After a while, the IRS goes, if you're still losing all this money, how are you in business? And then that's when you get audited to determine if you are a business or a hobby. So, then, when your business starts to make money, you're going to be paying taxes on that profit. You're just going to be paying taxes a little bit differently. And you may wind up with a lower taxable income than you do with your W-2 job. But if you're working a W-2 job and you own a business and you make money in that business, you're going to be paying those taxes. Okay. That's just the way it is. Now, can you go through and invest in real estate? Absolutely invest in real estate, because again, when you invest in real estate, there are deductions that go along with investing in real estate. There's also risk that goes along with investing in real estate. But if you sell that property, then you're, depending on how long you've held the property, you're going to be paying taxes at a different rate. This is when we start talking about capital gains rates. And the long-term capital gain rate, the max capital gains rate is 20% versus the 37% max income tax rate. So there are, so the point is that you're not going to get away from paying taxes. It's just going to be how, and really looking at tax advantaged ways to grow your money. This is why you go to a financial advisors and you find, the legal ways. Tax shelters are legal. Okay. Tax avoidance is legal. Tax evasion is illegal. That's what you go to jail for. So this is why you hire financial planners and investment people, because then they can really help you grow your money in tax advantaged ways versus just paying income tax on your W-2 job. Okay. I know this might not have been the answer that people were looking for, but but taxes is a big picture thing. And when you move yourself from being the W-2 wage earner, ain't nothing wrong with jobs. Okay, so let me stop and say this too, because a lot of times our business owners, sometimes we get very arrogant and get it twisted. There is nothing wrong with working a job while you're building a business. Use your job to fund your business. It's not necessarily the smartest thing to go jump off into the abyss and just go, I'm just going to be a business owner, and you have not prepared for that. Do not do that. Okay? That's the no-go at this station, if you ask me. But everybody makes their own decisions. But the reason I said that is because, when you're talking about becoming a business owner, it is a completely different shift in mindset, and there is no safety net. There is no, take vacation days and sick days and all of that, because, unless you have the proper systems in place, if you don't work, you won't eat, even when you have a business. Okay. So this is why I'm saying that, the tax bills aren't going to go away, whether you are a W-2 employee or a business owner or a real estate investor. The taxes are not going away. It's just going to be a change in how you pay your taxes. So if you are a high income earner and you looking at this tax bill going, listen, I ain't trying to pay this anymore, then you need to employ a financial advisor that's going to help you find tax advantaged ways to grow your money. That's what you do. And then you grow your wealth. That's what you do. And then it's just a difference in how you paying your taxes. But the tax bill ain't going away. The whole just understanding, different corporate tax laws and all that. Tax law does not discriminate. And that's one of the great things about the tax law. It does not discriminate, but you must have money if you are going to, if you're going to max out the tax code. You have to have money to do that. And so what we wind up seeing, though, is we wind up seeing, people like, okay, well, if so-and-so ain't paying taxes, well, I shouldn't be paying taxes. Everybody's tax situation is different. How people earn their money is different. You have to look at your situation, talk to the proper professionals to find out ways for you to grow your money in a tax advantaged way, so that you are paying the least amount of taxes possible. Okay. And that ain't going to be zero unless something has gone horribly, horribly wrong. All right. So I really hope that, helps you change your mindset on the whole, on the whole tax thing, because the fact is that, yeah, we're just going to pay. And you hire people to help you, whose job it is to stay abreast on tax advantage things. And I'm gonna give you a perfect example. Okay. So back in late 2017, when they were first releasing the new tax code, I came on here and talked about opportunity zones, right? Qualified opportunity zones. Hey guys, this is what's coming down the pike. Get with your financial people. See if you can invest in these things, right? Well, here it is now, 2019. Everybody's now talking about, these qualified opportunity zones. Guess what? Wealthy people who hire financial advisors whose job it is to stay on top of these things, they already knew. They invested first. That's why I keep telling you to hire professionals, so that you can be the one that's getting that inside phone call going, yo, this is what's about to happen. Get your money ready, right? This is why you hire professionals, because we as individuals, we can't stay on top of everything that is going on in the financial world. This is why you hire people. You hire tax people. You hire investment people. You go to the doctor, right? To take care of your health. You hire people to take care of your money, and what you're going to pay them to help you take care of your money pales in comparison to what you earn on the back end. So this is the shift in thinking that we need to have when it comes down to money. Wealthy people have money and keep making more money because they hire the people whose job it is to know how to make more money, and they pay them. That's it. All right. So hope that gives you food for thought. Thank you guys so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock ish, and you can come right here to get your questions answered about your home business taxes. All right. Have a great day, and I will see you all next time. Bye.